mega cap companies reported last week. That was a little bit mixed. Non-farm payrolls weren't the best at all, so we can expect something there on interest rates. Oil sort of up and looking very punchy to the top side. And of course, gold and silver, if you haven't noticed, is under a correction. Now, prior to that last week, we had the mega caps report. To me, that was also interesting because it sort of gives us a bit of a flow as to what's going to happen in terms of how the US economy is tracking along. And those company profit reports always give us a good idea as to what happens. And in my mind, it's certainly some good guidance from these companies as to how the market will generally perform. As we know, Amazon surged 6.2%, good growth in cloud and advertising. Intel rose 7% as well, positive revenue and the guidance. But on the flip side of that, Microsoft didn't do too well outside what they wanted, and also Apple slipped on lukewarm guidance. So a bit of a mixed result. And I think that mixed result, when we also look at what happened in unemployment, will give us a positive read on the Fed. The US unemployment came out on Friday night. It wasn't good at all, actually. 12,000 people, and when we're expecting numbers like previously, of 70,000 was the average, but upwards of 120, 200 plus, coming in with a number like this, I think is very poor. So when you look at that, when you look at the company filings for their profits, when you look at the employment data, which wasn't that positive, and we've got the FOMC meeting this week and a result due out on Thursday, I think it'll be quite interesting as to what actually happens. Now, because of these weaker and softer numbers, we're getting a sense that the Fed might look to lower rates by 0.25%. That's obviously what they've been looking at. But given we had the strength in the numbers, employment numbers before, the Fed held off. So they might see a little bit of a flip in terms of that, and we might get that 0.25%. I tend to think I'd want to hold off as much as possible, but if the economy is looking to teeter a little bit on the soft side, then this might be preemptive. Remember, we have seen some aggressive preemptive strikes in terms of interest rates coming off in the EU and the UK. The US has held back quite a lot there on that, so it might be a bit of a relief there. Let's see what happens. I guess also on the flip side of that, if we are talking about inflation easing, then what do we think of oil with what's recently happened? Obviously, big concerns there, Israel against the Middle East. Let's put it this way. Obviously, things in there in terms of Iran. Iran has come out and said, well, look, just be careful. There will be some retaliation from the Israeli strikes. The question is how big they will be and what the impact after that will be. Israel did not target any of the oil facilities, but let's hope that doesn't happen. Remember, Iran is a major producer, is also an OPEC member, so if something happened there, we could see a sympathy vote, which will probably crimp supply, and to me that is an issue, and oil prices go higher. Please subscribe to our YouTube channel and click like to inspire you to take trading actions.